My name is Brock. I'm the program manager here, and thank you again for being able to join us. I'm very happy to introduce David Taylor. David is a board member, has been a board member with AutismBC for the past 7 years. He is a child on the spectrum who is doing well hugely as a result of the early days of autism diagnosis and early intervention. David has taken a special interest in family finances and has worked to broaden his knowledge on tax issues in respect to autism. And for the past number of years, he's been putting on these presentations across the Lower Mainland. And we're very fortunate to have him share his knowledge with us because he wishes to give back to the autism community so everyone can keep their money that they have earned and understand the benefits that different families can apply for. I think one of the lines that really stood out for me last year with this presentation was David said, if you are supporting a child on the spectrum, you are feeling the financial stresses and you deserve to know all of the benefits that are available to you. And with that, I welcome David Taylor.
Well, thank you, Brock. And, you know, a big thanks to Brock and everyone else at the AutismBC team. They've all really stepped up to the plate in this pandemic. Everybody's had to adjust to the new reality, and I must say they've done an amazing job. And so thanks to their good works, we've been able to keep presentations like this going. So today, a broad overview of the taxes, and this presentation will take about an hour and a half to about an hour and 45 minutes. In terms of questions, if possible, if you could keep them to the end, and I'll stay around as long as necessary to answer any questions you may have. I think Brock has also supplied you with some handouts, and so there shouldn't be a need to take too many notes during the presentation. All the relevant definitions and web links are on that, so you can refer to those as required. And then towards the end of the presentation, I'll give you a practical example how you can pull all this together and do your taxes for 2020. So having said that, I'm just going to jump in ahead and start talking about it. And why am I here? Well, I blame everything on this guy. This is my son. He was diagnosed with autism when he was 20 months old. He's now 17 and honestly quite a handful. When we first went through the process of autism diagnosis and getting the team up and running, taxes was just something I hadn't considered at all. And you know, it wasn't until a year or two later and somebody mentioned, well, there might be something in taxes, and I started looking into it, and there wasn't a lot of people talking about it. So that's why I put together this presentation. And I've been giving this presentation for, I'm going to guess, about 10 years now. And a lot of people approach this and they think the world of taxes is very complicated, and it's really not. And I have to say up front that I am not an accountant. I'm not a financial services professional. I have no services that I can sell you. I'm simply a dad who's been doing this for a long time. So, you know, the one thing I can tell you, as Brock already mentioned, you know, if you have a child on the spectrum, I can guarantee that you are feeling financial stress. And it matters not whether your child is high functioning, low functioning. Everyone has their own unique challenges. And so today I'm going to try and do a little bit to alleviate the financial stress and show your way through it on the tax side of things. So one thing I can tell you is that for some families, taking in this presentation, taking it to heart, can actually amount to quite a sizable amount of money back. So it does pay to go through it step by step. And for some families, there could be a lot of money coming their way. So the first basic message for today is this is not rocket science. It's actually fairly straightforward. It may feel intimidating at the beginning, but it's really not. Once you grasp the basic concepts, you'll be able to do this yourself. And from year 2 onwards, it's going to be quite an easy ride for you. You also do not need an accountant to do this for you. This is a do-it-yourself affair. And with respect to autism, there's nothing that they can do that you cannot do cheaper. And I'll talk a little bit more about this later on. What I can say is I've talked to many, many families over the years who were intimidated by this process and did not think they could do it themselves. Once they jumped into it, they found that they could actually manage the process. So today it's all about a do-it-yourself affair. It's just a matter of getting the basics right, and then the rest is easy. So today is just about learning the very basics. I'll give you some references you can use to dive a little bit deeper, and I'll give you some practical examples. And once again, once you do it the first time, it's going to become a lot easier. So I would think that the vast majority of you use tax software, and I think it's in the realm of about 80 to 90% of people use tax software. If you're one of those very few people who uses a paper return, I would strongly recommend that you move towards the software. A lot of what I'm going to talk about today, some credits and deductions, impact on other credits and deductions. And the software sorts all that out for you. It takes it all into account. And the beauty of the software is you do not need to know the numbers. You do not need to know this kind of stuff. So you just, it'll help you along the way. It'll help you optimize your taxes. So if you're not using it, I would highly recommend it. Personally, I use TurboTax, and I have nothing to recommend it against the others. I'm sure they would all do the same thing, but the examples I'm going to use today are from TurboTax, as that is the most popular one in use today. Some websites that you can refer to after this presentation, and these are on the handout. The first one is asdfunding.com, also known as Autism Funding in BC. It's got a lot of resources for the provincial and the federal funding. It's got some handouts, it's got some files, sample letters, templates that you can use, and I will be referring to those today. The other one you can have a look at is taxtips.ca. This is an accountant-run website, and if you want to take a deep dive into some of what I'm talking about today, it's an excellent website. And of course, the other one is also the Canada Revenue Agency, and that is the ultimate guide, but sometimes that's a very complex site and not always user-friendly. So before we get going, I just want to have a quick talk about deductions versus credits. And I do this because every year I always get a question, what's the difference? So I might as well address that up front. And a deduction is something that reduces your taxable income. And the tax savings here may be as high as 54%. And an excellent example is an RRSP, which you're obviously familiar with. On the other hand, a tax credit is something that reduces your taxes owing. And the federal tax credit is 15%. So if I tell you you have a $100 tax credit, that is worth $15 to you. And a good example of this one is the medical expense tax credit. And it's also worthy of note that sometimes there is a provincial component to this as well. So for the most part, deductions are better, especially if you are a higher income person. But for the most part, you cannot choose which one is a deduction and which one is a credit, although there may be one exception to that rule. Now, the software will account for all this, and most items you cannot choose which one is a deduction and which one is a credit. So getting into it all, when you start this whole process, the first question that you have to ask is your child disabled? And the answer here is no, your child is not disabled until the government says they are disabled. So the step one here is we're going to apply for the disability status from the federal government. And what I tell people at this point is to slow down and take your time. And it's very important to take your time and do it right. And this is the opposite of the experience you've had with the BC autism funding. When it comes to the BC autism funding, we tell people to go as quickly as they can with their assessment because you are not going to get the BC autism funding until your assessment is complete. And so quite often, if people can afford to get a private assessment, we recommend they do so rather than waiting for the Sunny Hill assessment. With the federal government, on the other hand, you can always backdate the money that you've got coming to you. So it's important that you get the process right because you can always go back and get the funding that you missed. So the form we use to apply for the disability status is the form T2201, which is also known as the Disability Tax Credit Certificate. Now, on the handout, there is a link to an Autism and T2201 guide, and I strongly recommend that you download that and have a good read all the way through before making the application. Today, I'm going to touch on some of the highlights, but before you send it in, you really want to go through everything in detail and make sure that you are doing the correct thing. So, some highlights of the form. What we're going to do is we're going to get a qualified practitioner to certify that the individual has a severe and prolonged impairment and its effects. So what is a qualified practitioner? It could be a doctor, it could be a nurse practitioner, it could be a psychologist. And effects, in this case, can be mental or physical. And prolonged means at least 12 months. So what the Canada Revenue Agency, or CRA, in their bureaucratic wisdom have done, is they come up with a way of defining what a disability is. And they've divided someone's life into what they call the basic activities of daily living. And those being speaking, hearing, walking, elimination, which is a bowel or bladder function, feeding, dressing, or mental functions necessary for everyday life. And what they're going to do is they're going to have a look at how the individual's basic daily activities can result in a disability status. And you can see how a number of these could absolutely apply to autism. Now, what I will say is the mental functions necessary for everyday life can be very confusing. And what I would say is when you go to your practitioner, what you don't want to do is go to your family doctor. Most GPs are not very good at filling out this form. You want to go to someone who specializes in autism. It could be a pediatrician, or it could be a psychologist. And a psychologist can only comment on the mental functions portion. A pediatrician, a medical doctor can actually comment on every one of the categories. So it depends on your child and who you deem to be acceptable. So going through a couple definitions here, the CRA talks about severe impairment. Well, what does that mean? It means the individual must be markedly restricted, and that means unable to perform one or more of the basic activities, or significantly restricted in two or more of the basic activities. Now, let me give you an example of what I mean here. Let's talk about the activity of speaking. If your child is completely mute, cannot say a single word, then right off the bat, that individual is markedly restricted in one of the activities, which is speaking. And on that basis alone, your child would meet the criteria for disability status. On the other hand, if your child's speech is limited, perhaps your child can only use a few basic words, cannot communicate with you properly, that would be a significant restriction in the speaking category. So you're halfway there, and you meet another significant restriction in another activity, then you would meet the bar for disability status. So with this form, you need to take personal responsibility. This is your form. It is not the doctor's form. And it's important that you take charge of this whole scenario. When you go to the doctor, you can't just hand over the form, get them to fill in something, and then leave without reading the form. You want the doctor to portray the worst case scenario for your child. And if the doctor is not writing something that would meet the bar for disability, then you need to rip up the form and go to a different doctor. And a lot can go wrong at this stage. And I've seen this happen many times where people would take a form that has very sloppy work or incomplete work on the part of the doctor, and they would send it in, and of course it would get turned down. So you look at it from the perspective of the doctor. They went to medical school because they want to make all the sexy diagnosis. They did not go to medical school because they want to fill out very long and complex forms. And you think about when you go to your family doctor with whatever ailment you have, a lot of doctors want you in and out as quickly as possible. And that simply does not work when it comes to this form. So you want to go to a specialist, and it would not be unusual for them to charge a fee for doing this form. And I say fair enough, because it is a very long form and they need to take their time here. And just as a note, if they charge you a fee for it, that is a medical expense which you can claim on your taxes. And I'll talk more about medical expenses later on. So on this form, a key point is, when did the impairment begin? And ideally, the impairment began at birth. And why is this so important? Well, it's all about money. And I'm going to talk more about this, but if the impairment began at birth, then you can backdate a lot of what I'm going to talk about today back to birth or 10 years, whichever is the later. So for some families, getting this right is very, very important. Now, it's not always easy to get the impairment from birth. And this is something that the doctor fills out on the form because it'll ask, when did the impairment begin? And if your child is a low functioning child, my child certainly met that bar, was diagnosed at 20 months, and the pediatrician put down that it began at birth, and CRA approved it, and away we go. On the other hand, if your child is a teenager and was just diagnosed with high functioning autism, it could be difficult to get the pediatrician or psychologist to say that the impairment began at birth. And even if they did say it began at birth, CRA may or may not buy that. But at the very least, the impairment did not begin on the day that you walked into the doctor's office and asked them to fill out the form. If they try and pull that one on you, just walk away and find another doctor, because that is just not reasonable at all. So we've filled out this form. We've double-checked it. We've made sure the information is complete. Everything looks reasonable, and we've sent it to the government. What happens next? Well, this is the hard part. We've got to sit back and wait. A lot of people get excited. They want to start cleaning a bunch of things, but you have to wait. Right now, the CRA website says they will process it within 8 weeks, 95% of the time. And if you believe that, well, maybe you spend too much time believing the government. But it takes as long as it takes, and there's nothing that you can do to hurry it up. Now, in due course, what the CRA will do is they will send you a letter, and it will, first of all, tell you whether or not you are approved for the disability tax credit or you're not approved. They may ask for more information. And one of the more important things on this letter that a lot of people overlook is when was the effective period of the impairment. They'll tell you qualify for the disability tax credit for one tax year to another. Now, it could be that they approve you for the disability tax credit for 1 year or 2 years if they believe that perhaps your child can grow out of this condition and lose the disability status. In my case, when I did it with a very young child, the pediatrician did a really good job of writing it up, and it was obvious that this was a severe case, and CRA said that my child was approved right through to the tax year 2021. So basically until my child became an adult. So this is something you have to keep in mind. So should you have a professional do the form for you? Well, you could go to an accountant and you could have them charge you a lot of money. And think about yourself, and before you understood the world of autism, you might look at a child with autism and the idea that this child is disabled would not necessarily occur to you. We all know now that, of course, autism is a disability. So do you want to go to your accountant and spend 45 minutes explaining to him why autism is a disability? Or you could just do the form yourself. Now, to be fair, if English is your second language, or if you're doing everything through your accountant anyway, well, fair enough, but you do not need to do this. The other one you really need to stay away from are these so-called disability agencies. So if you Google disability agency or disability tax credit, you'll find all kinds of websites which look really slick. And they will tell you that this process is too complex. You can't do this by yourself. You need their expert advice, and their expertise in the world of disability. And I can tell you it's absolutely not true. These are scam artists, and they will take a lot of your money. I've heard figures like, $1,000 up front, and then they're going to take 30 to 50% of everything you've got coming back from the government. They really cannot provide any expertise in this. So please stay away from anything that you find through Google. What happens if the government sends you a letter and says your child is not approved? Well, this is where you have to be honest with yourself. If you were the tax bureaucrat looking at your application, what would you think? Was the form fully completed? Was the disability soft-pedaled? Did the doctor not do a very good job? And if that is the case, then the best thing you can do is just rip up the application and start all over with a new one. Go to a different doctor and do it correctly. The letter could say, well, we're asking for additional information from your doctor. And fair enough, you have to let that process play out. You could file an objection within 90 days. And how do you do that? Well, the instructions are right on the T2201 form. So what I would say is, don't just walk away at this point and say, oh, well, I tried. I mean, if you honestly believe that your child is disabled, then you need to do something. Now, I will say that a notice of objection, on the good side, it goes to a different person in a different office who will have an objective look at the application. On the other hand, a notice of objection could take quite a while. How long? I don't know. I notice I have done notice of objections before in other areas, and they've taken years to get resolved. So it could be that the best answer is to start all over again, and that is completely your right. So if your child is approved, what happens now? And this is where money starts falling from the sky. Well, we wish that was the case. Some money is going to start coming your way, and this is what we're going to be talking about today. So the first one we're going to talk about today is something called the Child Disability Benefit. And this is an addition to the Canada Child Benefit. And what is the Canada Child Benefit? Well, this is the monthly amount you get from the government every month just because you have kids. And the Child Disability Benefit is a supplement to that. So that's going to increase the amount you get every month from the government, and it is going to automatically start. There's nothing you need to do to start the disability benefit from adding to your monthly check. And as it is for the Canada Child Benefit, this is a tax-free benefit. So how do you apply? And it should be automatic, especially if you are already receiving the Canada Child Benefit. And if you are living under a rock and you have never heard of the Canada Child Benefit, you can apply online using the form RC66, or you can do it online using the CRA My Account. So can it be backdated? So remember, we talked earlier about when did the impairment begin? So if the CRA in their letter to you has said the impairment began at some point in the past, then you can backdate the Child Disability Benefit back to the date of impairment or 10 years, whichever is the later. And so the government will automatically backdate the Child Disability Benefit for the current and the 2 previous Canada Child Benefit years. Now, if your impairment date precedes that, then yes, you can request backdating from the government, and all you need to do is make a written request to the government. You could simply send them a letter. You could use the form T1 Adjust, which is a very, very simple one-page form, no math required. And again, you can go back to up to 10 years. And if you need a template letter, there is one on the ASDfunding.com website. So how much is the child disability benefit worth? Well, for a low-income household, it could be as much as $2,886 tax-free dollars per year, which is very nice. Thank you very much. We'll take that. And for a high-income household, the amount is reduced to zero. And I think the last time I looked at was somewhere in the realm of about $170,000 a year. So if we're talking about backdating, if you backdate perhaps 10 years, can you imagine that figure times 10? And that's a very healthy paycheck that you're going to get from the government. So there's a good reason why you certainly want to take your time with the application process and make sure you do it correctly. So what about the disability amount? So we're moving on to a different one now, the disability amount, which is a non-refundable tax credit, which is also known as the disability tax credit. And the non-refundable tax credit means that this will reduce your taxes owing, but it cannot reduce it below zero. So long as you do pay some tax, you can use the disability tax credit. And there is a provincial component to it as well. And there's a supplement for individuals who are under 18 years of age. So if you are a taxpayer, this amount is worth to you $2,694 per year, which is very nice. Thank you very much. And now, can you claim this on behalf of your child? So the disability tax credit certificate is attached to your child, and I would be highly surprised if your child has any income, which means they cannot use it because a non-refundable tax credit cannot reduce your tax below zero. So yes, you can transfer it to a parent, and the term the government used is disability amount transferred from a dependent. And how is this done? Well, it's very easy using the tax software. And I will give an example, practical example later on as to how you are going to do it. And it's important to know that the disability tax credit is interconnected with other credits, and I will explain this a bit more later on. So can the disability tax credit be backdated? Well, yes, it can. And the answer to everything, by the way, is yes, everything can be backdated. So when they changed the form, I think it was about 3 years ago, there's a little box you can tick to say, do you want the government to automatically backdate this for you? And unless you don't want to get money from the government, I would say go ahead, tick that box, and the government will calculate this automatically going back to the applicable date, whether it's the date of impairment or 10 years, whichever is the later. So you can imagine the $2,600 times however number of years you have to backdate, that can amount to quite a bit of money. So a lot of us spend money out of our own pockets for therapy costs. Now, we all know that the BC government will give us some money, $22,000 or $6,000, depending on the age of your child. And if your child is a high-functioning individual, perhaps this is all you need, in which case, great. However, for many of us, we spend considerably greater quantities of money on therapy for our child, and we spend out of our own pocket. So can we claim this from the government? Yes, you can. You can claim it as a medical expense. But there's a big but here. An ABA therapist is not a licensed therapist. If you go through the tax guide, you can see things like nurses and dentists and doctors and pharmacists, but nowhere in there will you find an ABA therapist. So you technically cannot claim it as a medical expense. However, I would consider the use of the word tutoring, because tutoring is a medical expense. And let's talk about that. Tutoring services are used by a person with a learning disability or an impairment in mental functions. Well, that sounds like our kids. And tutoring can now become a medical expense. And the government says the tutor must not be related to the individual, and a medical practitioner must certify that these services are necessary. And that's a fairly easy thing to do. I know what my wife does is, once a year she writes up a letter for our doctor to sign, and she goes in there and say, sign this, and the doctor is always so willing to get rid of her as quickly as possible that they sign and stamp the letter, and she's out of there. So for medical expenses, it's very important that there is no double dipping. And what do I mean by that? So if the AFU, or the Autism Funding Unit, pays for tutoring or therapy for your child, you cannot turn around and claim that same money as a medical expense. So if someone else pays for it, you can't claim it. So this is only money that you have spent out of your own pocket. So you do need to keep these monies separate. So if you are going to claim money from the government, the federal government is a bit anal when it comes to information that they want. They want to see the receipts and invoices, and the information they need includes the name of the tutor, their SIN number, the dates of service, the services rendered, whether it's tutoring or whatever, the signature of the tutor, and you must get a receipt that indicates paid. Now, I'm going to show you a sample invoice, which was created from a spreadsheet, and this is available at asdfunding.com. And if you are not a spreadsheet person, do not panic. I have another example to show you in a moment. So I construct this invoice for my BIs every month, showing what the services are and including all the information that the government wants. And for the vast majority of us, the BIs that we have are self-employed contractors, so there is no deductions to make. The flip side of it is a receipt that has all the information I mentioned earlier. Now, if you are not a spreadsheet person, that's fine. You can simply have a document where your BIs can fill in the information, the dates, the service, the number of hours. And once again, all these files are available at asdfunding.com. And if you want to go to Staples, you can just get a receipt book and fill in all the information. And all these are available in your handouts, by the way, as an example. And one thing I'll tell you from experience is when you pay your BIs out of your pocket, the rule is no signature, no check, no exceptions. If you give your BIs money, you need to get their signature on a receipt at the same time. Do not wait until the end of the year and you think you're going to gather up all the information and get them to sign it then, because I will tell you what happens is BIs scatter to the wind all the time. Maybe they go to Europe to find themselves, maybe they fall pregnant, maybe they move on to other teams. Whatever it is, it's going to be a hassle chasing them down. So again, the cardinal rule is if you're going to pay them, get them to sign a receipt at the same time. So what should you not include in your invoices? You want to keep the information concise and do not confuse the bureaucrat with detail that they don't need. Now, As a parent, you should control the information on the invoices. And normally the way it's going to work is your behavior consultants will send you invoices, and that's fine. We'll talk more about that later. But for your BIs, especially the green ones, they don't know what you want. So it's better that you control the invoices, you put the information down so it's done the way you want. Now, once again, I'm going to give you something I learned through experience. When I first started off, I would hand out the daily service record to the BIs, and I would say, could you please put the date, the hours of service, and I would tell them the information that I want to see on there. And they would all nod their heads and go, yep, no problem, no problem. And at the end of the month, they'd give it to me and it would be not what I wanted. And I'd say, oh, no, don't say this. You know, they said we went roller skating with, you know, so-and-so, or we went to the pool. You don't want that information on there. And so you tell your BIs, do it correctly. And they go, no problem. And the next month, they would screw it up again. And this goes on and on and on. And it's a frustrating thing until I eventually got to the point where the obvious answer was give the blank daily service record to your BIs and say, put whatever you want on it. I don't care. Just as long as you have the date and the number of hours you worked, write whatever you want. Hearts, flowers, rollerblading, I don't care. Put it all down. And then you take that and you construct an invoice that has the information that you want on it that's going to be worded the way you want in order to get your tax benefit. So imagine that you are a bureaucrat working at the tax center and someone makes a claim for medical expenses. And you're going to be applying some good faith here. You want to do right by the family. So you look at it and you see something like team meeting. And you're going, team meeting. How is that a medical expense? There's nothing in the tax guide that says team meeting is a medical expense. What if they said something like overlap? Again, same thing. It's ludicrous. They don't see that as being a medical expense. Travel, it's the same thing. Now, you can claim your travel, and we'll talk a bit about that later, but if your BI is charging you travel, you cannot claim that. Equipment purchases cannot be claimed as a medical expense. And one of our parents went all the way to the Tax Court of Canada, and they said, no, you cannot do this, which is another reason I recommend if you were going to claim for equipment, it's much better to do this through the BC Autism Funding Program. I believe it's 20% that you can claim as equipment, and so you'll get better bang for your buck if you do that. Now, some people put down ABA therapy, and what I will say is this might work for you. I've known people that just put down ABA therapy and they have no problem. In the early days of ABA, there was a lot of audits done of parents, and CRA would come back and they go, well, ABA is not a medical expense. And this created a lot of grief for a lot of people. So you might be all right with it. My personal recommendation is rather than putting down therapy, you use the word tutoring. And that is definitely a medical expense. So I want to talk about something called a personalized therapy plan. And now, for the first minute, this is going to sound very complicated, and it's really not. It's actually very easy, but just bear with me for a few minutes. So for your BIs, as we talked about, we're going to use the word tutoring. But tutoring is not what your behavior consultants do. They do not do tutoring. They don't do one-on-one with your child. They're overseeing the program. They're training the BIs. They are not doing tutoring. So a few years ago, the federal government created this new category called the personalized therapy plan. Now, remember that most consultants generally make their own invoices. And once again, this is for money spent out of your pocket. This is not money spent using AFU funds. So the personalized therapy plan is a medical expense, and I will give you an example later on as to how you can pull this together. So a personalized therapy plan is something, a plan must be designed for someone who is eligible for the disability tax credit. The payment is made to someone who is in the business of providing such services to unrelated persons. And the therapy has to be prescribed and supervised in the case of a medical impairment by a medical doctor or psychologist. And again, this goes back to that letter I was talking about earlier. And the plan needs to, has to be needed to access public funding for specialized therapy. In this case, it's the BC Autism funding. So one question I always get is, does the invoice need to say personalized therapy plan on it? And no, it does not. It says whatever it says, and that's fine. You don't need to go back to your consultant and say, would you please change it? What you do need to have is a receipt, in the same way that you need a receipt from your BIs. And this is a very simple process. Just go to Staples and fill out a receipt and get your consultant to sign as having received these funds. So what items are not covered as medical expense? Vitamins, supplements, over-the-counter medications, even if they are prescribed. Organic foods cannot be claimed. Materials and equipment used in ABA programs. Administration costs and travel expenses for therapists. Now, if you have to travel over 40 kilometers in a one-way direction, then you may be able to claim that as a medical expense. So moving along, let's talk about childcare expenses. And I think most of us who have kids are familiar with this. Basically, if you earn income from employment, if you carry on a business alone or as an active partner, attend school, carry on research or similar work, then you can claim child care. For child care expenses, the difference here is if your child qualifies for the disability tax credit, you can now claim up to $11,000 a year, which is a much higher bar than a neurotypical child. And you can claim this as a child care expense for the lower income spouse. So this could be worth a lot more money to you. Now, we'll say that a child care expense, it may reduce the disability amount supplement. Not to worry about that. The tax software will sort that out for you. And it's generally claimed by the lower income spouse. So if the lower income spouse in your family has no income, then the child care expense will not be of use to you. There's another category of medical expense called attendant care. So if you have hired someone to care for your child, a nanny might be applicable. You could even have something like house cleaning services. And in this case, for attendant care, you can claim as much as $10,000 per spouse and still claim the disability amount. So hiring someone to care for your child, a nanny might be a good example if her contract specifies that she would provide such care. And it is a medical expense, so you're going to add this in with everything else along with your tutoring, dental bills, drug bills, and all the rest of it. Now, it could be, going back to the example of a nanny, if both parents earn an income, perhaps it might be to your benefit for the nanny to claim that as a childcare expense, which could be worth a lot more to you, being a tax deduction. But this is something that is a very individual thing based on your family circumstance. You may wish to have a look at that. So attendant care is a medical expense, and all the medical expenses are going to be lumped together, and they're going to be claimed by one spouse. And I'm going to give some practical examples later on. Moving along, talking about the Canada Caregiver Tax Credit. This is formerly known as the Family Caregiver Tax Credit. So what this is for your kids is this is a 15% tax credit on $2,273. So what that means is this is worth about $340 to you. And this one can be backdated as far as the 2012 tax year, which was the year the Family Caregiver Tax Credit was introduced. So this is an interesting one because you do not necessarily need to qualify for the disability tax credit. So the Canada Caregiver Tax Credit is a, let's call it a just because tax credit. You have higher expenses, you've got a burden on your family, so this is a just because tax credit. We're going to give you some extra money from the government because your child has some challenges to meet. So to get it, you can get a signed letter from your doctor, and the doctor must show that the child, because of an impairment in physical or mental functions, is dependent on others for an indefinite duration. However, if your child qualifies for the disability tax credit, you do not need this letter. So if you're one of these people who does not qualify for the disability tax credit, there is a template letter at asdfunding.com. Talking about the home accessibility tax credit, you can now claim up to $10,000 in renovation costs. And the individual in question must qualify for the disability tax credit, and the housing unit must be owned. So the renovations in question must allow the individual to gain access to or be mobile or functional within the dwelling, or reduce the risk of harm to the qualifying individual within the dwelling or in gaining access to the dwelling, and it must be a permanent part of the dwelling. So what does that mean? Well, I'll give you one example. What can be used is a fence. Perhaps your child is an elopement risk, and you need to put up a fence in your backyard to contain your child and keep them safe. Then you can absolutely claim the cost of installing a fence as a home renovation tax credit. So the following categories are not eligible. There's maintenance, appliances, home entertainment systems, sorry about that, financing costs, renovations incurred mainly to increase the value of a dwelling, or security monitoring. Now on that point, I always get questions about that. It says security monitoring, but what about the cost of installing a security system? And a lot of people make the very valid point that if their child opens the front door and runs out, they want to know about it. So if it's a permanent built-in security system, in my mind, that sounds completely legitimate. I have not talked to anybody who's actually claimed this, but it seems quite reasonable to me. Now, worthy of note, there is also a BC renovation tax credit, and yes, you may claim both. So can you backdate these? Yes, of course you can. You can backdate everything. So if last year your child qualified for the disability tax credit and you put in a fence to contain your child, then you can use the form T1 adjust and say, hey, I paid for a fence last year and my child qualified for the disability tax credit. May I please have the home renovation tax credit? And you don't need to do any math here. The CRA will do that for you. The home buyer's amount. So this is a $5,000 credit, and it's normally only for first-time home buyers. However, if you acquired the home for the benefit of a related person who is eligible for the disability amount, and that home is more accessible or better suited to their needs, which is a pretty broad category there, then you can claim this amount. And so you can claim it again and again and again. So if you move to a new home because you need space for your child's therapy program, or you need a backyard to contain your kid, whatever the reason, and I don't think it would be hard to come up with a reason, then you can claim the home buyer's amount again and again and again. So a $5,000 tax credit at 15%, that is worth $750 to you. So can you backdate this? Well, yes, of course you can. You can backdate this. So as an example, if you purchased a home 3 years ago and your child at the time, the backdated impairment was before that date, then you can go back and claim the home buyer's amount, which is worth a nice $750 to you. So who should claim the expenses and the funding? So if you go to the Autism Funding in BC website, just cut and pasted the example from there. So you don't need to write this down, and I'm certainly not going to go through this, but this is on your handouts, and this will give you a simplified instruction as to which spouse should claim which credits on the tax form. And again, there's no math involved here and no complicated explanations. But if you follow the chart, that should hold you in good stead. So the CRA My Account, if you have not already signed up for it, I would recommend that you do so. It'll give you a lot of great information about not only your own tax status, but it will give you information such as the disability tax credit eligibility. Because what happens is a lot of parents get the letter from the government saying you're approved for the disability tax credit, and then they throw the letter away and realize 3 years later, oh gosh, I should have hung on to that letter because I have no idea when the eligible tax years are for my child. But all that information is contained on the My Account. And so you can see from my page here, it shows that my son is eligible for the disability tax credit from the year 2006 to 2021. A quick note about audits. And this is something that really gets the heart rate up. And none of us like to get this, but most audits are not actually true audits. It's just a request for information. So if you have requested medical expenses, because you're filing your taxes online, you do not actually submit your receipts with the tax return. So it's very, very normal for the government to come back to you and say, would you please provide us with your receipts. And what I do is I take all of my medical expenses that I submit, I scan them all, I save them as a PDF, and when the government sends me this letter, it's a very, very simple process using the CRA My Account to upload this document, and all the information is there. Very, very easy. And if you've done it properly, you really have very little to worry about at this point. So the easy way as I mentioned, is to use tax software. And I'll be showing the examples from TurboTax today. This will calculate all the credits and deductions for you. So you do not need to go into this process knowing the tax numbers, knowing what is a credit and what is a deduction. The software is going to sort this out for you. And in some cases, there may be a visual guide to help you through each individual credit and deduction if you get confused. So the tax software, whichever one you use, it needs to know some basic items. It needs to know that your child qualifies for the disability tax credit, and that may be worded in different ways. They may say that, have you filed a T2201, or does your child qualify for the disability amount? And you have to make sure that you tell the software that the particular child does qualify. The software needs to know who will claim the disability amount. And especially in the case of our kids, we're going to transfer it to the parent, and which parent is going to claim it. And we need to enter our medical expenses. So let's go through a sample tax return. So we'll take a fictitious family called Bob and Jane Smith being the parents, and Bob earns $60,000 a year and Jane earns $20,000 a year, and they have 2 typical children. So if you go into TurboTax, you'll find that the total tax owing for the family is going to be $11,252. So now there's going to be a change in the family, and the family has 1 child diagnosed with autism. And in their case, the disability tax credit was approved, and this family paid out of their own pocket $5,000 for a behavior consultant. They paid out of their pocket $20,000 for ABA therapy, and we're going to call that tutoring. And they were forced to buy a new home to accommodate the therapy program. And they also had to pay for a new fence to contain their child, and that cost them $2,000. So with that example, we're going to go into TurboTax. And these are screenshots right from the 2020 TurboTax return. So if you go through what they call the easy step, they simply ask you questions to guide you through your taxes. And under the category of claims for dependent, we can see that there's a couple we want to review here, specifically the disability amount transferred from dependent and the Canada Caregiver Amount. So would you like to review or claim any of these? And the answer is yes. So the child with autism in this case is Gwen. And so as we edit the information from Gwen, it's going, what credits would you like to claim for this child? And in this one, we're going to tick the box for disability amount transfer and caregiver amount. And the next step is it's going to go, okay, great. For the disability amount transfer, do you wish to make the claim for the disability amount transferred from Gwen? And the answer is yes. And which parent is going to claim it? In this case, we've chosen the higher income spouse, who is Bob. Now, when you filed the T2201, you would have designated one parent to receive the transfer. And if you were doing it correctly at the time, you would have chosen the higher income spouse, just to keep things simple. And if you need to change this, you need to contact CRA. You could do it on the phone. You may need both parents on the phone at the same time in order to do this, or you could just simply write CRA a letter and go, could you change it from Jane to Bob? And that should be a fairly simple proposition. So for the Canada Caregiver Amount, we're simply going to answer the questions here. Is Gwen dependent on you because of physical, mental impairment? And the answer is yes. Does Gwen depend on others for assistance? Yes. Now, do you have a signed statement from a doctor? Now, remember earlier I said if your child qualifies for the T2201, the disability tax credit, you don't need the letter. However, TurboTax does not have that nuance in there. So when it comes to do you have a signed statement, just go yes. That's all you have to do. Don't worry about it. Just say yes and carry on. And in this case, because it's a non-refundable tax credit, we're going to go to the higher income spouse, which is Bob. And that corresponds to the chart that we have in your handout, saying the higher income spouse is going to claim this one. Now, for the home buyer's amount, we're simply going to answer all the questions. And I'm not going to read all the questions, but as you go through it and it gets to the very bottom, it said, you will qualify for the $750 home buyer's tax credit. And in the next screen, it said for the first time home buyer's tax credit, how much do you want to claim? And it says the maximum you can claim is $5,000. And so $5,000, as you remember, is the total amount you claim. And at the 15% tax credit rate, that works out to $750. So technically, you could split this with someone, but in this case, we're going to keep it simple. We're going to have the higher income spouse claim the entire amount and carry on from there. Now, for the home accessibility expenses, remember we paid $2,000 for the fence, and we are going to claim that in this box here. Now, for the British Columbia tax credit, remember earlier I said there was a provincial component to you. And this is a bit of a trick with TurboTax. They haven't done this one well. You can see the first line says the BC Seniors Home Renovation Tax Credit. And you think, well, that doesn't actually apply. But it actually does apply because the true name of this one is the Seniors Home Renovation Tax Credit and Persons with Disabilities Tax Credit. So poorly worded from the standpoint of TurboTax, but we're going to go ahead and tick the box for the BC Seniors Home Renovation Tax Credit. Jumping over to medical expenses. Now, there is no math involved here, and I'm going to show you how to decide who is going to claim it. So in most cases, it's going to be the lower income spouse, which is going to get the best bang for your buck. So we're just going to start off and we're going to tick the box for Jane to claim medical expenses for 2020. And so remember, for your medical expenses, we're going to combine everything, all your consultant receipts that you paid for out of your own pocket, your personalized therapy plan, tutoring, other drugs, dental, glasses, registered massage, physio. We're all going to put it together into one amount. And then on Jane's return, we're going to put the total amount, which is $25,000. So TurboTax has something called a medical expense optimizer. And so we're going to have a look, and it's going to help us determine who should claim the medical expenses. So now we've already entered Jane as being the one to claim it, and that's fine. And so you can see in the middle there for Jane, she's claimed $25,000 of expenses. And on the right-hand side there, the significant number to pay attention to is the total tax payable by this family. So the combined taxes for Bob and Jane are going to be $6,337. And so that is the amount which is really important. So instead of Jane, we're now going to select Bob to claim it. And so the total expenses of $25,000 jumps over into Bob. And we can see that the total combined taxes are now just over $2,500. So in this case, there is a significant savings by getting Bob to claim for it instead of Jane. And this is important because there is no math involved here. And I'm not going to explain the nuances of why this is. It's just important to know that it's going to be different for different families as to who should claim it. And in this family, it works out better that Bob claim the medical expenses. So earlier on, we selected Jane to claim the medical expenses, and that's fine because in the next screen, it's going to say, who do you want to claim it? And now that we have this information behind us, we're going to select Bob to claim for medical expenses. So what does that work out to now? So the bottom line for the family is they're going to be spending just over $2,500 for total tax owing. And it will also give you the estimate for the Canada Child Benefit based on the information that you have put down there. So you remember previously, before the autism diagnosis, the taxes were considerably higher and the Canada Child Benefits were lower. So what have we actually saved through this process? Well, the first thing we've done is we've gotten an extra $2,525 from the child disability benefit, and the taxes were lowered by $8,740. So we've saved a total of $11,265, which is very nice. Thank you very much. It's not going to make you rich. It's not going to make up for everything that you're going through with your child, but it's a very real tax savings. And if you imagine that you can backdate this information, as I've talked about, the child disability benefit, the disability tax credit, the caregiver amount, medical expenses, home buyer's amount, and on and on and on, you can leverage that for previous years and get a very nice tax check back from the government. So it is important to get that right. Now, a quick note for 2020, if you're one of those people who qualified for the disability amount in 2020, you would have been given $600 from the government. And if you are just applying this year, I'm very sorry, that was so far a one-time bonus from the government. However, if you are one of the people who did receive it, unlike all of the other COVID benefits provided by the government, this one is different because it is a non-taxable amount. So if you receive the CERB and all the rest of it, that is something you have to report on your taxes. But if the $600 amount, do not enter it on your tax return. You do not have to pay tax on it. Now, just branching into a different area, and I'm going to go through this very briefly because this is a topic that I can spend hours talking about, and I'm not going to spend hours talking about it, but I just want to get you a very small taste for it. But the Registered Disability Savings Plan. If you have ever stayed awake at night and you're worried about the future for your child, you're wondering, what happens when I'm long gone from this planet? Who's going to pay for my child? Who's going to pay for their expenses? Well, the Registered Disability Savings Plan is an absolutely amazing, incredible deal from the government. And this far outclipses anything else that we're talking about today, because this is a way to save money for your child's future. So it works very similar to a registered education savings plan, except that the matching amounts from the government are much, much higher. And in some cases, the government may match $3 for every $1 that you put in, which sounds really great. And you're saying, well, what happens if I'm a low-income family and we can't afford to put a single penny into this plan? Well, you can just open a registered disability savings plan, and the only prerequisite is you need a SIN number and you need to be approved for the disability tax credit. You can open it up, and if you're low income, the government is just going to automatically put in $1,000 every year. You don't need to do anything to get this $1,000. The government's just going to do it automatically. And on top of that, if you want to add money, in some cases, if your family income is less than $97,000, without going through everything, if you put in $1,500, the government will put in $3,500. And all this amount compounds tax-free inside this plan. And I want to stress that this is a long-term savings plan. If you're thinking this is a way to get money in the short to medium term, it doesn't work that way. And I won't go through all the explanations as to why. What I would say is you can first start get some information from RDSP.com. It's brought to you by the Plan Institute, which worked with the government to create this plan. And they are just looking to give you free money. And the best part is, after years and years of this money compounding tax-free in the account, when your child becomes old, we're talking about 60 years of age, they're going to start withdrawing the money. And at least here in BC, when you take the money out, it is not going to affect their disability benefits that they're going to get from the provincial government. So absolutely everyone in this room should have an RDSP. It doesn't matter where you are in the income spectrum. Everyone has something to gain here. And imagine your child is 4 years of age. You are a low-income family. You can't afford to put anything in, but you open a registered disability savings plan. You make absolutely no deposits. By the time your child is 60, that plan could be worth almost $250,000, and you have not put in a penny. If you are a little bit higher income, your family income, let's say for the sake of argument, is $90,000, and the grandparents decide, you know what, we're going to put in for a grandchild $1,500 a year, and we're going to do that for 20 years. And so that's a total contribution of $30,000 over the life of the plan. When this child is 60 years of age, that plan could be worth over $1 million. And the withdrawals, they're partially taxed, but it's not going to affect their future benefits. So it really is an amazing program. Now, as I said, I'm not going to go into detail on this one. If you go to plan.ca, you can see that they have online webinars that will introduce you to this program. You know, it's a couple hours of really great information. You need to educate yourself about this one because it really is a fantastic program. And that's really all I wanted to say about that, because I just wanted to give you a taste for it and get your enthusiasm up and apply for this program. So my name, David Taylor, the email address, it's on your handout. And, you know, a lot of what I do today is based on feedback that I've received from parents, and they've given me their experiences and their tips, and I adjust this presentation every year. And so, you know, if you want to let me know how your filing went, how it went for you, that would be great. I would love to hear from it. One of the features we use today that it's a fairly new feature that I've just discovered in PowerPoint is the closed captioning. You know, let us know in the comments how you feel about that. And perhaps for those of us who are hard of hearing, maybe that helped you along the way, let us know if it's a distraction or if it's something that we should be using. And I'm pleased to hang around and answer any questions that you might have.